Hello, welcome to TheoTrade. My name is Doc Severson. This is the Theo Night Report for Thursday, November 3rd. I'll start out today looking at the VIX futures here, the /VX. And just today, we've seen about a 30% move just in the VIX futures from about 15 up to almost 20 here. So big move. These things went bid. And just from a scale perspective, you can see that the August of 2015 move got them up here maybe around 31. So we're starting to get some movement now on the VIX futures. They have been bid. They have been extremely low this summer, as we all know, where things just went nowhere. But right now, traders are starting to sense the fear in the water right now and are starting to hedge off into not only the jobs report for tomorrow, but also obviously into next week's election. Now, just to put things into perspective, let's look at a couple of different option chains here. Now, we have the 7 November, and the expected move for 7 November is 27 points. So there's an expected move between now and then of about plus minus 27 points. But if we go to 2 days past that, which is next Wednesday, we have a plus minus almost 61 point move in the S&Ps. So the spread, the election occurs in between here. So you can see that the election itself is causing about a 33 point expected move by itself just alone. So what this means is, if we actually put this in visual terms, looking at the chart here, that our expected move envelope is for next Wednesday, anywhere from about 2150 up here, all the way down to just a little below 21 or 2030. So this is our expected move envelope for next Wednesday. So you can see that we're pricing in a lot of potential risk and movement into next week. And so this is where I see so many traders just adopt kind of a tunnel vision into what they think is going to happen. So usually the reason for this is because they do their due diligence in trolling all of the different social media sites or different news sites, which these days you can't tell the difference between a news site and a social media site because they're using clickbait to pay for the news media site, right? So it's all kind of the same thing right now, and rehashing the news. And this is what forms public opinion and the mainstream opinion. Now, the mainstream opinion normally is something that's faded. It usually is incorrect. So right now, if you think you know what's going to happen, next Tuesday evening, when the election results start coming in, and not only is that the presidential election, but it's also both houses of Congress. Are they going to flip? Are they going to remain where they are? Who's going to win the executive branch? Now, if you think you know what's going to happen based on watching the news and doing a good job of watching these typical networks, you're probably going to be wrong. And this is where the typical investor gets it wrong, because they get their news from the same source as everybody else. If you're not factoring in already whether the price can go up from here, whether the price can go down from here, or whether it can just kind of walk around, get noisy, and go sideways from here. If you're not factoring in all three of these outcomes from this, including perhaps going beyond this range. Remember, this is only a 68% chance that the movement is going to stay within this range here. 68% chance. It certainly could go beyond one standard deviation. One standard deviation is plus minus 61 points here. In fact, we could get a fat tail movement. This is where we go beyond the normal distribution and get something that occurs down here in one of these fat tails. So we could get a fat tail movement here. We just don't know what's going to happen. So this is why I'm saying that you've got to factor in with your current portfolio or whatever you're holding or whatever you intend to do. A lot of people, I hear a lot of people talking about, well, I'm going to do this when I see the price do that. Okay, make sure you factor in all three of these occurrences, and not only a one standard deviation move, but perhaps something beyond that point. What are you going to do? And you got to program yourself to do that now. Again, you're not trading versus the market. You're actually trading versus yourself. You are your own worst enemy when it comes to trading. How many times have you said to yourself, well, I knew I was supposed to do that, but I couldn't pull the trigger, or I never factored in that movement, or I knew it was going to go up from here and then it went down, right? We are our own worst enemy when it comes to results. Now, the hits keep on coming. We have the jobs report tomorrow morning. This comes out at 8:30 Eastern, 7:30 Central. They are expecting $1.78 in terms of new jobs. They're also expecting a drop in the unemployment rate. These are all fairly optimistic numbers. The last time that we went through this in early October, we had a very similar expected consensus number, and we pulled in $1.56. So a pretty big miss, but the market didn't seem to really care. And I'm not sure that the market is really going to care about this jobs report tomorrow anyway, because of the fact that we have day to day, this appears to be so much drama in terms of who will hold the executive office come next January. Now remember this, I hate to keep going back to the election, but this is really what the news is about here. It's not about jobs, because the jobs won't matter until December in terms of the rate hike. So right now, we're sitting at about a 64% chance of Janet Yellen hiking rates next month, right? So that's sitting about 64% right now and is unlikely to change even with tomorrow's report. So I think they were on a beeline. They're on a mission to raise rates. They're going to look for any reason to do so. But, this is like the worst kept secret out there. I don't think anybody is really going to be surprised by a rate hike, much like the rate hike that we had at the end of 2015. It was kind of like, oh, okay, we've heard you talking about this now for months, and you finally went ahead and did it. Okay, terrific. Okay, so back to the chart with just a couple of things before I finish up today here. Again, looking at the spiders, we didn't see all that much volume today. So this is not a waterfall decline. This is not a 2008 type of move where all of a sudden we just end up falling off the cliff and you see volume like this, just spiking up with movement like this, where we just have these crazy movements like this. This has been a very classic orderly decline or retreat from higher prices. So this is what we're seeing, is we're seeing a market that's doing its best not to try to scare anybody, not to move their own market against them, with some of these funds in retreat right now. And so it's a very, very orderly, very low volume, kind of an odd decline right now. So there's no panic, but we are starting to see, as I showed earlier through the VIX futures, a lot of hedging. So the VIX futures have gone bid. So even though the S&P has barely gone down by 0.5% today, we saw a pretty big move in the VIX futures. So the last thing I want to show you here is something I talked about on Tuesday with this volume profile that's showing here. And apparently the term here is the point of control here is the major volume node of the trading. So this is basically volume if we stuck it on its side. So instead of seeing volume based on time, we're seeing volume based on price here. So what we're looking for is the area that's done the most trading in that, and that's obviously been just below this 2100 level on the S&Ps, or 210 on the spiders. So just below that 210 level on the spiders. If this loses this level and starts to slide down the backside here, then we could see this really speed up, because these types of moves do not create support and resistance. This is what creates support and resistance. So if the price can't stay on this point of control, we're going to see it very quickly slide down to here to the next level of support. And really there is very little amongst these types of moves here that really create support and resistance, other than the main bottoms themselves down here at about 180 or 1800 on the full S&Ps. So I'll just finish today by saying there's no real reason to be a hero and trying to use the event on Tuesday and try to game the event on Tuesday, because we just don't know what it's going to run into in terms of the magnitude, in terms of not only the price movements, but also the volatility movements, which will affect us as option traders. The easiest way to handle this is simply to be patient, let the market show which way it wants to go, not have any preconceived notions about it, and then simply take ourselves into that trend as it appears. And that is it for today's report. Thanks for listening, folks, and we'll see you in the weekend report.